Welcome everyone, and thank you so much for joining today's Global Impact Investing webinar. Today we are going to talk about how to invest in water and wetland protection in a Q&A with Ian Friday from Kilter Rural. Our guest speaker is a fantastic expert in this space. Ian Friday, you are the Executive Director and Chief Investment Officer at Kilter Rural. But before we dive into our topic, let me quickly introduce myself. My name is Camille. I'm the founder and CEO of Bloom Impact Investing. And before we start, I would like to acknowledge the First Nations people as the traditional owners of the land on which this meeting is taking place today, which for me is Meanjin, Brisbane. I recognize the country north and south of the Brisbane River as the home of both the Turrbal and Jagera nations. I pay deep respects to the elders past, present, and future. Welcome again. It's a pleasure to see you all. And for our new community members today, let me introduce Bloom and the purpose of our events. And again, apologies for the background sound. I hope it's not too distracting. At Bloom, we empower people to invest, to do well, and fight climate change. We are on a mission to make climate impact investing easy and accessible. And part of this mission is to offer educational opportunities like these webinars today to propel the voices of impact investing and sustainable finance experts far and wide. The aim of our webinars is to build a community of impact investors and people using their money as a force for good, so we can all build a greener, more circular and inclusive economy. We think sustainable investing should be accessible to everyone, and we see a future where a carbon-free and inclusive economy allows people and the planet to thrive. Quick housekeeping, please note this event will be recorded and the webinar will be made available to all of you and people who registered through Zoom after the event via email. Now, a note from our lawyers, please be aware that the information provided in this webinar will be general in nature and does not constitute personal financial advice. Before acting on any information from this presentation, you should consider how appropriate this information is in regard to your objectives, financial situation, and needs. Finally, please note this is a safe space, so you can ask any questions throughout the event by typing in the chat. We'll keep 15 minutes at the end for your questions, which I will facilitate. Now, let me introduce Kilter Rural shortly. Kilter Rural was founded in 2004 to be a long-term value, sorry, my brain is scattered, to be a long-term value for investors through resilient farmland and water investments sustained by natural capital regeneration and climate change mitigation. Kilter has a 16+ year track record delivering against their investment philosophy, combining financial returns with positive environmental and social impact. Today, we are going to dive into one fund that Bloom has just made an investment in that I absolutely love, called the Murray-Darling Water Fund. The Murray-Darling Water Fund invests in water entitlements in the southern Murray-Darling Basin to achieve the multiple objectives of securing water for agriculture users, realizing a return and restoring threatened wetlands in the process. We'll dive into how financial returns are generated with Ewan later. So welcome, Ewan. It's a pleasure to have you, and we're going to start diving into the questions.
Fantastic.
So maybe we can start with a quick introduction. So I quickly explained that you are the Chief Investment Officer at Kilter Rural, but can you tell us a little bit more about your amazing experience in various financial and commercial roles you had in the past?
Sure. Thanks very much, Camille. And yeah, really excited to be here today. Well, I'm talking to you today from my office on the family farm where I grew up in Northeast Victoria. It's something that, you know, our family's been involved in since about 1850s in this part of the world. So farming and agriculture sort of runs deep. When I left school, I took a different path initially and studied and actually worked for PricewaterhouseCoopers for 10 years. both in Australia and in Europe in corporate finance roles. That was really interesting. Spent 3 years in Central Europe working all around Czech Republic, Hungary, Slovakia, Latvia, Lithuania, Romania. It was a fantastic time. I still maintain a deep connection to that part of the world. That's where my wife comes from. And that sort of made a big impression on me in terms of how, valuable travel could be to people in terms of changing their outlook on the world. And so when I left PwC, I went and worked for STA Travel, which sadly isn't with us anymore, but it was a student-focused travel business, global in reach. I joined as the CFO and then became the managing director for Australia and New Zealand. And, its philosophy was really about, travel can change the world by letting people know that, things, it's not right and wrong, they're just different, people. So that was a really fun time. But I knew since I was about 15, Cullen Gunn, who founded Kilter Rural. And we sort of started talking sort of 2006, 2007 about what was going on at Kilter, and Kilter had just won its first institutional investor mandate, which was really about aggregating and restoring farmland in northern Victoria, which had been sort of subject to quite a lot of degradation through poor management practices and changing demographics. And so, when the sort of second phase of that project got going, I joined Kilter at the start of 2008 as a financial capacity, like a CFO. And pretty quickly, we saw an opportunity to pitch to our institutional client an investment opportunity in water assets. And the 1st of July 2007, there'd been a process whereby water entitlements, which I could go into later how they work, became unbundled from land. So up until that point of time, if you owned a water entitlement, it was embedded in your land title for your farm. But there was a recognition that they needed to have a functioning market, they would need to separate these assets. And that occurred on the 1st of July 2007. And we saw, because we were buying farms with water, we saw, there's a really interesting opportunity here to go and buy water entitlements and generate investor returns by providing products to farmers. So instead of having to go and buy water entitlements, we could provide products to them like leases or forward sales and other risk management products based on those water entitlements that would enable them to grow their business and go about undertaking their agricultural pursuits, while we could generate in returns for our investors. And we also felt that the underlying economics in relation to these assets was really compelling, because it's this absolute scarcity and increasing demand. So it's sort of pretty, it's not rocket science to work out what happens in that scenario, that over time the assets would appreciate. And it's proven to be a good strategy. And I'll talk a little bit more later, I guess, about the Balanced Water Fund. But, as you mentioned, Kilter's objective was to sort of profitably improve Australian rural, land and water assets. That's been the mission from the get-go. We had a view, or we're trying to work out how to do that in water. It's sort of much easier when you're running a farm, you can make the direct interventions. But when you own a water asset and you lease it to someone else, it's harder to get that direct, environmental impact that we were looking for. So, in 2015, we teamed up with the Nature Conservancy, who they've been a great partner. I think they're the world's largest environmental NGO, based out of the US. Oh, hang on. Get rid of this. And we kicked off the Balanced Water Fund. So that's, I guess, that's a snapshot of my journey. Most of the time at Kilter, I was involved in developing our water investment strategy. And then in 2018, I handed over that role of General Manager Water to Matt Bryant, who's now running in his capable hands. And I took on a broader CIO role, looking for further opportunities for investors.
Thank you. I think it's great to understand how your personal journey has informed your career in a really unique way. And I guess your connection to what we call in impact investing the beneficiaries is really important, as in your ties to the agricultural world that you live and breathe is really special. I'm amazed as to see how innovative that would have been in terms of vehicle to invest back in 2008. Even today, it's really hard to invest in water and nature-based solutions. So you have been an incredible innovator for years. It's really remarkable. But let's go on to the next question. I would love you to give us a bit of an overview of Kilter's mission and its role within climate action in general. Where do you see yourself within that picture?
In the whole climate change
That's right. In
conversation?
terms of climate action, you know, we can't address all the problems at once. We have to own little parts of the answer. Where do you see Kilter in that picture?
I mean, it is a great question. We're sort of seeing the effects of climate change every day. You know, it's just really visible when you're in agriculture, what's going on and how sort of quickly things are changing. The evidence is really clear and we've got to act fast.
I guess you've been at the forefront of droughts and extreme weather events. And
well, yeah, the industry is as a whole, you know, so despite perhaps, you know, some of the sort of broader popular perceptions, you know, the farmers I meet, they understand it, you know, all too well. Things aren't like they used to be. And, you know, agriculture needs to adapt. And, you know, we feel that we play a really important role in that. And that's one of the great things about being involved in agriculture. You know, unlike just about every other industry that can play a role in addressing climate change through reduced emissions, in agriculture, we've got the opportunity to take steps to sequester emissions that are already there. And that's that's quite a unique position to be in. And, you know, it can occur through one of two ways. It can occur through either revegetation, where there wasn't vegetation previously, or through changing management practices that enables the soil to sequester more carbon. And we have projects registered with the ERF in both those domains. You know, we're really looking forward to growing those over time. Our key mission, though, isn't really to, it's not about monetizing that in the first instance. You know, our mission is to produce food and fibre in a carbon neutral basis. And that in itself is a really challenging thing to do. So our view is you can sell carbon credits when you've offset your own and you have a surplus, because we think that, you know, in the not too distant future, consumers will demand, the market will demand, and we want to be prepared to be supplying carbon neutral food and fibre. You know,
I think, if I may jump in, I think this is what is also remarkable about Kilter, is this position at the intersection of so many climate solutions. So not only you are addressing some carbon sinks, which are essential to the answer to climate change, but you are also addressing the sustainable agriculture and sustainable food system. So we can see the full integration. And I think this is what's missing sometimes with some impact investment managers, that silo approach of addressing just one small part of the problem, but not really looking at all the externalities throughout the process. And with water, it's interesting because we see, you know, from the land sink to all the way to the plate, essentially, the impacts of that investments. So
yeah, precisely. I mean, one of the great things, again, about being involved in this space is that there are pathways, and it's not always a trade-off. You know, the pathways of sustainable agricultural management lead to better carbon outcomes, and also can positively correlated with financial outcomes. You know, there's sort of emerging, or it's called emerging, you know, it's something that we've been practicing for 16 years, but we're still on a journey, mind you, of what's sort of come to be termed regenerative farming, is a pathway to achieve that, so that you can achieve those multiple outcomes of improved environmental outcomes, including carbon, as well as improved financial performance and better resilience. So, you know, I could talk about that for a long time, but you know, it's a really exciting place to be.
Yeah, actually, this is a great segue to my next question. So, I want to dive a little bit deeper into water. So, obviously,
Sure.
Kilter has been a firm believer in water as an investment opportunity. Can you explain why? So, you've touched on a few things like, you know, the scarcity of the asset appreciating over time. But why do you think it's a unique opportunity for both the impact and returns perspective? So can you explain how it correlates or isn't correlated to other markets? Like in financial terms, without being too technical, tell us more about water as an asset.
Yeah. Okay. Well, I guess there's a couple of components to that. One is, you know, water as an asset. One, water as an impact investment. So talking about water as an asset, I'll sort of try and set the scene a bit. So, you know, I appreciate for many people, it seems a strange concept to invest in water. So you sort of need to consider a bit what it is that you invest in. So we invest, and the Balanced Water Fund invest in water entitlements. And water entitlements have really the same features as a land title. So essentially, you know, you could think about them as a perpetual right to receive water out of a defined system. That all sounds technical.
Is it like a, I guess, a property title?
It's a property right. So
that's right.
As I said previously, they unbundled it from land, but they put it into like the Victorian or New South Wales Water Register, which sits inside the Land Titles Office.
So I was gonna ask, before these entitlements, like who owned this water? I guess.
Well, the farmers owned it,
yeah,
but the value of it, and it was registered on their title. So let's say, for example, if you're a fruit grower in the Goulburn Valley and you owned 100 megalitres of water entitlement to water your fruit trees, then that would have been embedded into the land title on that 100 hectares. And so when you sold your land, the water would go with it, and the people would value both the land and the water. But in the 1st of July 2007, they separated it. So the owner then had two assets. And as I say, like the Victorian Water Register just sits in the Land Titles Office. It's just another department, and they maintain all of the titles and the register of ownership of all of those titles. And so to use that example again, in the Goulburn system, it's reliant on the Eildon reservoir. And so when you own a high reliability entitlement in the Goulburn system, basically what happens is that Water Authority each year makes an allocation between 0 and 100% based on the inflows into the Eildon reservoir. And when you get those allocations, then you can use that to water your orchard, or your orchard in this case. And so you contact the Water Authority online, you make a water order, and it's delivered to you through this channel network, comes out through your meter, and the volume of water that you have used gets deducted from, it's called an allocation bank account. So it's all very, you know, it's like the water that goes into your home as a meter. So you know exactly how much has gone in. The water that's gone onto your farm, you know how much has gone in there. So there's these two components to it. There's the permanent asset, which gives you the right to receive those allocations each year. And then each year, with that allocation that you receive by owning the asset, you can then use that and have the Water Authority deliver it to you so you can water your crop. But you could also, when you receive that water allocation into your allocation bank account, you could just sell it to somebody else. You can go online and, you know, transfer it for a $38 fee to somebody else's allocation bank account, and they give you the money. So there's a market for that allocation. It's called the spot market.
Yeah, because needs will be different across different farms and agriculture practices, right?
Yeah, that's exactly right. And what's happened, you know, the introduction of these systems has made the expansion of the value of agricultural production in the Southern Murray-Darling Basin. It's enabled it to expand enormously because it works in two ways. It works in a season, so people who have surplus water can sell it to people who need water. And there's a price signal out there, you know, so when it gets dry and somebody down the river has got a very valuable crop that, you know, like a, you know, it could be an avocado crop. They paid $70,000 or $80,000 a hectare to establish it, and we find ourselves in 2019. It's really dry. There's not much water around. Now, they need the water. They don't want to see their crop die. But somebody in the Golden Valley who was going to water a pasture and feed, livestock, they can see, well, I can't make money. I can't make the same amount of money out of it as I could if I sold the water to the person who's got the avocado. So that market's going on all the time. And
so essentially the resource is going to the most valuable. It's an efficient system.
Yeah, it's an efficient system to allocate the resource to its highest value use, which was obviously what the authorities wanted to do when they established these systems.
Can we pause for a second here? I'm going to be a devil's advocate. In this efficient system, is there a risk for speculation?
Well, I guess that's the whole piece of work that the ACCC did in 2019. And they produced a 564-page document, which is by far and away the most comprehensive piece of work in detailing the history and operation of these markets. And they didn't find any evidence of speculation.
I think that's important because as impact investors, the last thing we would want to do is participate in speculating and I guess making profits of water scarcity in a way, but that's not how it works. Can you explain a bit why? Yeah,
well, I mean, the findings of the ACCC are that really the fluctuations in price are entirely determined by the supply. There just isn't any evidence of speculation being a driving factor causing the prices that have been observed in the market. And in fact, the ACCC was explicit in acknowledging the positive impact that investors have in this market in three key ways. They provide liquidity because they own water, but they can't use it. So they're always putting water allocation into the market or water products. They provide alternatives for farmers in terms of how they could access water. So because historically they either had to just buy the water in the spot market or use their balance sheet to go and buy water entitlements. So now there's an alternative way of doing it. And they also provide significant investment capital because, for example, a lot of the water entitlements that we've bought under transactions like purchase and lease back. They've got a farmer, they want to buy the farm next door, but they go to the bank to borrow the money to buy the farm. We'll buy the water assets on that farm for it and lease it to them on a long-term secure basis. So we're actually injecting that capital into agriculture in the system so that these successful farmers can go about, expanding their businesses. And that was explicitly recognised by the ACCC.
Yeah, thank you. I think that provides a lot of clarity, and it's not obvious to understand this when you are exterior to that world. So thank you. I think you made it really clear.
There's a couple of other points. I'll just go back to the impact part and also a little bit about how we work in terms of generating returns in this space. So, as I said, our thinking when we started the strategy for our institutional investor was generating long-term sustainable investment returns by providing water products to irrigators. And that essentially the most significant of those products are leases, so that a farmer, instead of having to go and buy water entitlement, they can lease the water entitlement off us, and that gives them certainty about what water they're going to have into the future without having to go to the bank or use their balance sheet to buy this capital intensive asset. And so that's the main way that we generate income for our water investors. And so coming to that impact question, that was a challenge for us because it's in our DNA. We wanted to generate impact, but we found, it was really quite difficult to think about how we could do that. And so we teamed up, it was sort of a bit serendipitous really, with the Nature Conservancy late 2014. It sort of took us a year to get it all together with this idea of the Balanced Water Fund. And the idea of the Balanced Water Fund is that you could have one water entitlement that could serve both agriculture and the environment just at different times. So, and it's sort of the underlying thinking behind it is that wetlands need water when it's wet and farmers need water when it's dry. because the wetlands have evolved to deal with this country, that of land of floods and droughts and flooding rains. But what's really important is that the wetlands do get wet when it's wet. And we've regulated these river systems and so forth so much now that oftentimes in moderately wet years, not so much like this year, but moderately wet years, there's no overbank flow. The wetlands don't get wet. There's so actually you need to allocate water to take it to those wetlands and get those outcomes. But in times when it's wet, the allocation price is really low. Because the farmers are getting, the water requirements from the sky, it's raining, and there's a lot of water around. So the allocation price is really low. And so the opportunity cost of providing water to the environment in wet periods is really low. But when it's dry, farmers aren't getting the rain. They need as much water they can get, but there's not much water around. So prices are high. So that was the underlying sort of magic, if you like, behind the idea of the Balanced Water Fund. And so it works such that in a really wet year like this year, it can donate up to 45% of the water that it derives from the portfolio to the environment. And in a really dry year, that ratchets back down to 10%. So, yeah, I mean, water investing itself doesn't per se have, an impact outcome. We had to manufacture it. And the Balanced Water Fund is a unique vehicle like that. It is the only impact water investment vehicle in Australia, and as far as we understand, it's unique in the world in terms of investing directly in.
Absolutely unique. I think it can be an inspiration for any nature-based investment, but that comes back to really understanding the environment and bringing people who have the environmental knowledge, which you've done with your collaboration.
Yeah.
Yeah. Can we just circle back to one element? So we've talked about wetlands that get dry when they should have more water. What does it look like in practical terms? Like, how does that translate in terms of environmental impacts? What's at stake? What's at stake when wetlands go dry?
Well, you can think about riparian, land joining water, as being, environmental hotspots. That's where really all the ecology occurs. That's where all the diversity of species is, both, flora and fauna. That's where your nesting grounds are for birds. That's where all of the, your reptiles and historically, pretty much the mammal populations, because everything needs water. And so these are just biodiversity hotspots around watercourses and wetlands in particular. The challenge has been that when we think about our river system, like the Murray River, it really shouldn't be called a river anymore. It's a regulated water delivery piece of infrastructure. There's so many weirs and gates and dams. And so generally speaking, unless we have a year like this, where those things are overwhelmed by the volume of water, it doesn't go over its banks. It doesn't get into the billabongs and wetlands and so forth that adjoin it. And they dry out and we lose those biodiversity hotspots, which is, understandably why we have the Murray-Darling Basin Plan. There's an, explicit recognition at the highest levels in government that we've got a problem here. And we can't afford to lose these, really iconic, extremely valuable environmental assets, and we need to do something about it. So
absolutely,
that's really what the fund's about.
I'm going to jump in here and share with our audience a few impact facts that really blow my mind. So the Kilter has impacted the Murray-Darling Basin profoundly, with over 3,300 hectares of diverse wetlands in New South Wales, helping create a stronghold for the endangered southern bell frog. They also reintroduced the previously extinct Murray hardy-head fish. I'm not a fisherman, but I think sounds like
only a little fella.
It's just little. Okay, maybe you can't fish. You can't even fish it. But the water donations also helped restore and manage the karst, carpets, and Bundero wetlands. I can't pronounce these things really well because I'm French, but these are home to Aboriginal artifacts, scar trees, and 17 culturally significant plant species. So we can see clearly the roots to not only the land, but the culture here as well. And I'm going to add that since 2015, if my research is correct, you have donated 9.5 liters of environmental water to 38 wetlands across Victoria and New South Wales. Do I have my facts right?
You definitely do have your facts right there, Camille. And there's a lot
And
of facts in all of that, but
and
a lot of water.
5 gigalitre water in the last financial year. So that's just enormous. I don't know if people in the audience can visualize. How do you even visualize 1 gigaliter of water?
Well, it's just a lot of water. I think about it this way. So a gigaliter is 1,000 megaliters of water.
Yeah.
And there's about 2 megaliters of water in a Olympic swimming pool. So, you know, it's like 1 gigaliter is 1,000 or so 500 Olympic swimming pools worth of water. And so it's like 10 times
it's enormous.
that. And yeah, and the donation that we're making, actually, it's in this year, 5,000 megaliters. We're absolutely certain it's the largest private water donation in Australian history. So it is really significant.
I think here we're touching on a really interesting space for impact investment in general, where we are starting to slowly understand the value of biodiversity and how much services come, how much wealth, how much health comes from nature working properly or not. So it's really fascinating, and I think impact investors are waking up to this problematic a bit more. So let's actually continue on that theme of natural capital investment, which is really a technical term to say, you know, we invest to support nature and also provide returns in the process. So in my view, you are an absolute leader and you were a trailblazer in this space for a very long time. What advice would you give to investors on this call today who want to get involved with more authentic nature-based capital investments? Where do you see this specific area of impact investing evolving?
That's a great question. Obviously, my answer will be somewhat limited. There's a lot of impact investment opportunities out there, whether it could be wind farms or solar and so forth. So I'll stick to what we do, which is land and water investments. And, you know, we do see, you know, increasing opportunity in the farmland space. The regenerative farming practices that we're implementing, and well, they've evolved really over the last 15, 16 years, but there's a lot coming down the pipeline in that world, you know, where we're able to produce more resilient food and fibre outcomes with actually less inputs. You know, the model that's been developed really when people talk about conventional farming, it's sort of farming systems have been developed really since the 60s, which were high input of synthetic fertilizers, herbicides, pesticides.
Very wasteful. Very wasteful.
Yeah, well, I mean, it certainly was a model that lifted productivity, but what it didn't focus on was soil health. And so, you know, we've had real problems in relation to soil degradation globally, and it's very hard to get it back. And it's so precious. And so when I think about regenerative farming, I think of soil-focused farming, and soil-focused farming means that you need a very healthy microbiome in there. You're looking after, you know, the bacteria and the fungi, because that's actually, they interact in a symbiotic way with the plants. But by, you know, if you introduce a fungicide, well, you're not only introducing the fungicide above the ground, it's impacting below the ground. So you need to be very careful about those things. And this pathway that is, you know, soil focused, and also recognizing the value of, you know, native vegetation in a landscape and the role that it plays, and things like pollinators in slowing down wind speed and reducing transpiration, and actually transpiring and creating, you know, a moisture environment. All of those things are becoming so more apparent. But what's been challenging has been working out how do you do that profitably. But that's actually now, you know, becoming, you know, really quite clear as to how you can make that happen properly. So I guess in terms of thinking about impact investments, I would just be cautioning people to do their homework, because naturally it's sort of a bit flavour of the month.
Yeah.
It's really interesting. I'll just give you a little sort of snippet as to how we see that happening. Is that, we've been participating in global ag investing conferences now for, half a dozen years. And, back in the beginning, there might be a session on ESG, at 3 o'clock on the last day of the conference.
Yeah. And
And
now
now
it's
it's just about embedded in every session, in every discussion. It is mainstream. People understand that they've actually really got to address these issues. But what we've been at pains to do is not only do it, but to measure and report it. So we provide comprehensive ESG reporting on our farmlands funds and our partners in relation to our balanced water fund with TNC and the Wetlands Working Group. Wetlands Working Group do the delivery, the selection and the actual on-ground delivery of water to wetlands, and TNC provide the scientific oversight. So we get every year there's a plan and there's a report at the end of the year as to how the plan worked, what was achieved, what changes in biodiversity were measured and reported, so that we can understand, was that the best use of those precious resources? Should we put them somewhere else next time? What was actually achieved? So, I would just be encouraging people to do the research and make sure it's real. And the people who say they're doing this are going to actually be held to account as to what was achieved.
I'm going to jump here and really encourage people on this call to check the report that you just mentioned. I have read it. It's really, to me, setting a benchmark in terms of how impact investors should see rigor in how they report on their impact. And I think it sets a certain level of, I guess, integrity that is really inspiring. And I think it could be an inspiration for other impact investors who want to get involved in nature-based solutions to look for this type of reporting and this type of details and this type of governance when they seek other nature-based investments. I'm going to ask you another question. So, like you just said, it's, ESG investing is becoming more and more mainstream. Are you interested and intrigued by other nature-based investments? So, to mind, it comes ocean-based solutions, carbon capture with algae and those sorts of new type of investments. I know it's not specifically your world, but
perhaps not so much outside agriculture, but at the moment we are developing a strategy which the major impact of it, whilst it certainly has a carbon element, but the major impact of it is reducing the sediment and fertiliser runoff onto the Great Barrier Reef Lagoon, because that is a significant problem. Obviously, the biggest facing the reef is climate change, but it sort of estimate around 40% of the challenge that the reef is facing as a result of agricultural runoff. But there is a really clear understanding as to how you can deal with that in the major industries that affect the runoff. And those major industries are grazing and sugarcane. And so we've got a strategy at the moment that we're working up, and actually Cullen's in London today speaking to potential investors about that strategy.
Wow,
so
that's amazing.
to make that happen.
Yeah.
That's work we've been doing with the Great Barrier Reef Foundation, who are looking for innovative approaches to try and address these challenges.
Is there an element of protecting mangroves and, again, soil and biodiversity?
It's really focused on soil again, and how you manage the farms. And there is a really good framework of farm management. It's just not being implemented. That can significantly reduce those, the impacts of runoff, or reduce the runoff and therefore the impact. So look, we're really excited to get stuck into that in the new year.
I think congratulations to you and your team. I think it speaks to your stewardship for impact investing, which actually leads me to a question about how you share these insights. Where do you see yourself as, I guess, a leader in establishing new practices and actually setting best practices? And how do you share your findings? I believe you have informed some government incentives. So can you tell us more about how you collaborate with government and other investors in that space?
Yeah, look, I think the area that we've been leading is in environmental condition measurement and reporting. And I had the good fortune last Friday to sit in a round table with the Honourable Tanya Plibersek in a discussion around an initiative called TNFD, Task Force for Nature-Based Financial Disclosure. And, we are enormously optimistic in the long term that could be really influential in the way in effective capital allocation decisions towards investments that are better or have lower in negative environmental impact. And so that's one way that we do it. But the other is really in that measurement and reporting, and we use a framework called Accounting for Nature that we've sort of been, how would I put it? We've been leaders in that space in terms of developing the methodologies to enable that reporting to occur. And it's a basis of reporting that is then subject to external audit. So it's absolutely verifiable. It's not a measurement like many are that say we did this or we did that. It's an absolute, what's the condition of the environmental condition today? What is it? What was it before? How has it changed under your stewardship? So it's not an input based, it's just an observed condition framework. And we think that that's really important because otherwise it sort of becomes a bit of a tick box exercise.
Exactly. Yeah. And you can't improve what you can't measure, right? That's
exactly right as well. Yeah. So, I'd sort of say that that's an area that we've been leading in. Cullen's very active in that space, both with Kilter, but also with Accounting for Nature, and we're seeing its take up, more broadly by some really large scale agricultural asset managers. So that's really encouraging.
It's a big global topic in Europe, and it's great to see an Australian manager at the forefront of this discussion. I'm gonna move on to maybe one or two last questions, and then we'll let our audience ask questions if they have any. I cannot do this event without mentioning the current market environment. So it's been a tough year in terms of the equity market, and there's talks of really high inflation and potentially going into recession. So it's a tough economic environment for Australia, and the market has been quite volatile. Do you think now is a good time to invest in water in that context?
Yeah, that is a great question. We haven't seen that level of volatility in water, and all of our returns are underpinned by external valuations that we receive every month on the entitlement portfolio. So we know what that's worth, and it's readily observable. So the prices of the assets in the portfolio are readily observable in the market, and they haven't softened this year. In fact, there's been some reasonably steady appreciation. Certainly over the last 12 months there has been, and even into this financial year. There's a lot of water around at the moment, so allocation prices are soft, but we're protected against that mainly because over 60% of our portfolio is already leased. So although allocation prices today are like $20 a megalitre, we've got lease yields that are protecting the yield at the moment. We're also sort of seeing, other players who are entering the market, seeing this as a good time to buy. Generally speaking, when it's wet, prices have been softer, and when it's dry, that's when you get the acceleration in prices. So, we think actually today
this year is a great year.
It's a good year.
Being a wet year. I'll jump into again share, because you are very humble, but I need to share this with the audience. So a couple of stats around your returns. The fund returned 19.4% in 12 months to April 30th, 2022. That's a 14.1% annualized return since inception. I think it's absolutely remarkable, so it was worth mentioning. And what do you think? What do you think about Kilter contributed to this great financial result?
There's a couple of fronts, and thanks for that. And I probably should have been more upfront about it. Obviously, we are extremely proud of the results that have been achieved. It's well and truly exceeded. When we launched the fund with TNC 2015, we were targeting returns of 7 to 9%. And, so it's been just fantastic that it's been able to reward those investors and deliver the environmental outcomes. So that's been enormously satisfying. In terms of, what we've done to drive them, there's two fronts really. One is that, we've been provider of water products to irrigators now since 2008. We've got a fantastic reputation as a great counterparty in the market, and that enables us to access really first-class counterparties, lessees. And that underpins that yield that I was talking about. The other thing is that we've been in the market and we've drawn our proprietary research. Pei Wan, our analyst, has been with us since 2010. There's nobody who knows more about the water market and what underpins it than Pei Wan does. So we can sort of draw on the experience and all of this proprietary research to understand what the drivers of the market have been and what they will be going forward. And that's guided the portfolio construction. So we've been able to harness the best possible capital growth for the fund. And so we look forward to doing that going forward as well.
So it's skills, it's heart, it's people.
All those things. Yeah.
That's the cocktail for success. That's amazing to hear. One last question, and then I'll let the audience ask theirs. What's next for Kilter? What are you wishing for the future to continue growing your impact? What do you need?
Well, we've got plenty of great ideas. As I said, we've got a strategy in relation to sugarcane farms in far north Queensland, in the Lower Burdekin. Would
that be a new fund that you might launch in the future?
Yeah. And the other is a second iteration of our Australian Farmlands Fund. And again, we're looking to bring that to market early in the new year, which will be really, it's a fairly straightforward play of buying relatively scaled farms that can justify the retention of best-in-class manager and probably 2 or 3 staff. So that, we're sort of thinking ticket sizes around the 30 to 50 million, and just going as hard as we can in the implementation of the regenerative farming practices that we've accumulated a skill set in, over the last 16 years. So it's not a little bit different to our farmlands fund that we've got at the moment, which has been more about aggregation and redevelopment. This is about saying, let's take scaled mixed farming assets, mainly in southeastern Australia, sort of from probably the Murray River to southern Queensland, and acquire them, already yield generating, and then implement these practices that we know will lift profitability and improve resilience over time. So it's about as simple as that. There's a lot we could talk about it, but that's what's in our pipeline at the moment. That's
amazing. And who can support this? Are you looking for, support from superannuation funds, from wholesale investors? Who can help you?
Traditionally, it's been difficult to get institutional engagement in these assets in Australia, and they have all sorts of reasons around that, regulatory and liquidity and all sorts of things. So, as I said, Cullen's in London at the moment. We're to be talking to investors there. We find, generally speaking, that European investors tended to be, for a variety of reasons, have had a longer term view on these assets and have been more receptive. So that's a sort of first port of call. We've had great support historically from wholesale and family office investors. And we've also got a US client who we manage investments for. And so they've also demonstrated some interest in these strategies. So we've sort of got a variety of sources. Unfortunately, I can't say it is amongst our major, institutional superannuation funds in Australia. They're just really quite difficult to get on board in this space.
That's unfortunate. Too busy investing in fossil fuel. Oops, sorry, I didn't say this. So if you have any questions, now is the time. Yuan is an absolute expert in this space. It's your unique chance to have your question answered, so don't be shy. I have 3 questions in the chat, so I'm going to start with Pepe. I hope I'm pronouncing it right. So Pepe asks, can anyone purchase the water beyond farmers? How do companies that use water work? I think I'm going to rephrase that by maybe
I think I've got the question. Yeah. So anybody can purchase water. So, and if you are a water user and you're connected to the delivery network, then you could purchase water like a farmer and request the authority to have it delivered to you in the way I described previously. So that could be the case for a food processor, for example, that's operating within the water delivery infrastructure space.
Okay, yeah, thank you. Someone asked for the name of the report, so I think it would be great if I could share it in the, you mentioned the scientific report on water.
So we do the TNC and the Wetlands Working Group produce 2 reports a year. They provide a summary and they provide a detailed report. We tend not to want to release a detailed report because it has names of the private property owners and so forth in there where the water's gone. So what we've had them produce is a report that we could make public that talks about, the watering, how many watering events, what was observed, the outcomes and so forth, so that we don't impinge on those privacy issues. So I'd be happy to share.
Is that on the website? I can't remember, or maybe you shared it with me.
Maybe I can share it with you and you could make it available to people.
Sounds good. Yeah, I'll send it in the notes after this event. That would be fabulous if you feel comfortable. Someone asked if Bloom invested in one or both of the Kilter Rural Water Funds. We did a small investment in the Kilter Water Balanced Fund. Only this one for now, but I really look forward to making more investments as our FUMs improve and grow. So if you want to support Kilter Rural, you can do so directly with Kilter. If you are a wholesale or sophisticated investor, if you aren't, Bloom is a great way to get exposure to Kilter amongst other things. So you can jump on our website where you'll find all the relevant legal documents with the PDS and so forth. Same thing for Kilter, 2 ways to invest, either directly to Kilter if you have the means. If you have slightly less funds to invest, you can still participate in this fantastic water investment through Bloom. So jump on our website and have a look at the documents there. Any other question from the
There's a question there that somebody unfortunately wasn't able to get an information memorandum off our website. I'm not sure what's happened there. There is a requirement just because of the regulatory environment that we must ask people to confirm that they are a wholesale investor. But I'm just trying to work out, if you wanted to put my email address in the notes and somebody wanted to email me afterwards, Camille, I could chat that through, and I really apologise if somebody has, completed all that and they haven't been able to get hold of the IM.
Yeah, all good. I think your website has some information on each fund, and there's a little form people can use, but yeah, that's no problem.
Yeah, but I'm happy to have anyone contact me if they want directly. Yeah.
All good. So if there are no further questions, we might wrap up. And a final thought, Ian, for this year, any wish for next year that you want to share with us?
Oh, look, I'm just really excited to get stuck into those 2 strategies that I mentioned. I mean, it's a really exciting time. We've got a really engaged, enthusiastic team who are also itching to get stuck into these new projects. So yeah, it's 2023 is looking, super exciting.
And there's a great sense of urgency. I mean, when you work on the Barrier Reef, the impact needs to happen now. We have no time to lose. So I bet it's a fascinating project to work on. Ewan, thank you so much for your time today. It's been fabulous. I've learned a lot. Although I had done a lot of reading on Kilter, obviously, it's so great to hear it from you. And congratulations on bringing your vision to life. It's a true inspiration to the entire impact investing community. So thank you so much for generously giving your time, your insights, and being a beacon of hope in the industry. Yeah, from the bottom of our heart at Bloom, thank you. And I wish you all the best for next year. We'll follow your updates for sure very closely. And for our audience, it's our last event for this year. It's been a fabulous year. Thank you so much, everyone, for your support. I would love to hear your thoughts on where you want this to go next year. What do you want to hear about? How can we build a really strong impact investing network so we can move capital to the right places and support genuine impact investor practitioners like Kilter, how can we move money fast and in a really efficient way? So let me know what you want to learn about. I'm all about creating educational opportunities so we can all collaborate and get things done. So with that said, I look forward to connecting with you all in the new year. And yeah, I wish you all a fabulous end of year celebrations. Thank you so much.
Thanks, Camille. It was an absolute
Bye.
pleasure. Bye now.
Bye. Thank you.